Hello, hi, good afternoon, everyone. Do wait for a moment while we are streaming over to YouTube as well. All right. Okay, just confirm. Hello, hi, good afternoon, everyone. Thanks for joining us today. Let me just confirm. Let's see if we are live on YouTube as well. 我 start 了，没有看到。Sorry for technical issue. Give me a moment. We are setting up the session. Okay, I think we do have it live on YouTube as well. Okay, so let me begin. Sorry for the delay. All right. So today's topic will be on the Beyond the Sparkle, Go as a strategic anchor. Right. So 1 hour session to share on this new ETF offering that we do have from LionGlobal. All right. So of course it is distributed also on Buoyant's platform as well as some other distributors. Right. So we have Xun Xiang with us here today. Right. So today's topic will be on that. But before that we begin, we'll just share there is still ongoing referral rewards, which if you are a client, you can actually scan this QR code to actually share a referral link, a unique referral link to your friends and family members to actually get the reward. All right. For this ETF, you can receive up to $600 worth of Sing dollars in cash credit for every 12, which is actually $12 for every 5K registered for the session. Okay. Let me go back. No, wow. Okay. Okay. Anyway, there's a 3.2 per annum. Okay, give me one. Sorry. I think there's some issue with the slides itself. Okay, never mind. I'll share the promotion later again. Also, right. So this is the QR code to join for the Telegram. All right. So now we'll move on first to Xun Xiang, who will share on the slides on the presentation itself for the goal, as we have some delay already lah. So just start straight to the session itself.
Yep. Thank you, Huanzi, for the introduction. Good evening, good afternoon, everyone. Thank you for spending on lunchtime. It's good that it's come to Friday. So for some of you, maybe it's TGIF. So okay, I will share screen. All right. Huanzi, can I confirm you can see my slides?
Yes, can see, no
Is my
problem.
audio also very clear for everyone?
Clear for me for now. I'll test on the later on YouTube. Yeah.
All right, Ken. Thank you. Okay, good afternoon, everyone. Thank you for joining us. I'm Xun Xiang from LionGlobal Investors, and I hit the ETF business here at LionGlobal Investors. So there's three key things I want you to remember about our upcoming ETF launch, which is the LionGlobal Singapore Physical Gold ETF. Remember these three key things. First, all our gold, we vault them in Singapore. So Singapore is geopolitically neutral, zero history of gold confiscation. Many other gold funds, they actually vault their gold in US or UK that have seen history of confiscations. Second, we fully insure our gold against loss, damage, and theft while in custody and transit. So many other gold funds do not fully insure their gold. And third thing is that the ETF would be expected to have similar liquidity to compared to many other gold ETFs or gold funds because the underlying gold is tradable globally. And because of this, liquidity is expected to be similar compared to many other different gold funds. But at the same time, our total expense ratio is actually capped at 0.39%. So this means you get better value, but at slightly lower in terms of total expense ratio. So just remember these three key things. Okay. In terms of brief introduction, LionGlobal Investors, we are part of OCBC Group. We are the asset management arm. We have been established since 1986, so it's our 40th anniversary. And our total AUM, right now we manage around 78 billion Sing dollars of assets for our clients. And we started our ETF journey back in 2017 when we launched the Lion Phillip S-REIT ETF. And since then, we have launched numerous other ETFs. In fact, our Gold ETF is our 10th ETF right now within the offering. And we have grown significantly over the years, and we are now the ETF issuer with the largest number of ETFs on the SGX. So among our ETFs, what you notice is among the top 10 top 10 ETFs held by retail investors, 3 of our ETFs are within the top 10 ETFs. So as you see here, based on SGX data, similarly, if we zoom into the SRS segment, 3 of our ETFs are also within the top 10 ETFs held by SRS investors. And if we dive even deeper into the top 10 ETFs based on trading volume, you'll notice that our Hang Seng Tech ETF has been the top traded ETF in 2025, but also in the past few years. So basically, it was the top traded ETF by volume from 2021 to 2025. And similarly, for our S-REIT ETF, it's been top traded REIT ETF by trading volume in 2025 and also in the past few years. So now the big question for a lot of investors is actually why invest in gold? Why gold now? Is it better to invest in another period and all those? So I think to debunk and also share all these contexts, I'll share a bit about the history of gold. So gold has been having an interesting history for the past 100 years. So if you notice that for the past 100 years, a lot of interesting events happen. Key ones being, for example, in the 1930s, where actually England, they have suspended convertibility of their currency back into gold. In 1933, actually, the US government forced the citizens to transfer their privately owned gold back to the central government at around USD 21 per ounce. Right now, if you look at gold price, it's already more than 5,000 USD per ounce. So there's been a significant shift in all these. And in fact, in the past 100 years, gold actually has been confiscated within the US and UK before. So these are the key things to take note. They have confiscated gold before, and a lot of gold are still vaulted within these two jurisdictions due to historical reasons. So I think another fun fact is that, for example, India, they actually vaulted some of their gold in the UK before, and there have been periods, in fact, where India actually tried to redeem their gold, transport all the gold, some of the gold back to India, but actually the UK back then didn't allow due to historical reasons. So technically, that was also confiscating India's gold, and technically, some parts of their reserves had to be written down. So with all these in mind, gold confiscation is actually a high geopolitical risk to consider, and where you vault the gold is important. And this is where actually Singapore comes in to be a geopolitically neutral jurisdiction with zero history of gold confiscation. And in terms of price appreciation, what we've noticed so far, key year to look at is actually 1971, because since then the US dollar was no longer backed by gold. So it was removed from the Bretton Woods system. And because of this, since then, with gold no longer backing the US dollar could be readily printed by central governments, central banks to be able to inflate their way out of debt. And right now, the total US debt is around 38 trillion US dollars, and there will be continued money printing to be able to inflate the way of that. So because of this, gold price in the long run is expected to continue appreciating. And right now, what we notice in terms of the appreciations, they have been modest so far. In terms of the even longer term, there have been greater gains compared to losses in gold prices. And we expect this to further continue due to long-term structural drivers, which I will share a bit more later. And during periods where equities, especially US equities, trade at elevated valuations, gold usually performs better. So last year, gold gave a return of around 68% in 2025 compared to US equities. It was already one case in an example. And during this period, especially when equity valuations continue to trade above historical averages, gold is important to provide diversification benefits because it has low correlation compared to other asset classes like bonds and also equities. So these are the key things to note because it can provide higher returns but at lower risk and volatility. And in the past 25 years, 26 years, we have noticed that there have been 10 equity market downturns. And during this period, gold actually returned positive in 9 out of these 10 equity market downturns. Not many assets, even bonds, they wouldn't able to withstand this kind of equity market drawdowns and also sell downs. But gold managed to return positive in 9 out of 10 equity market downturns. So all these contribute and reinforce its status as a safe haven asset. And in terms of a portfolio construction context and also perspective, what we notice in terms of a global portfolio is that, for example, if we have a 50% global portfolio, global equities portfolio, and 50% US bond portfolio, if we just make a 10% allocation to gold, it will actually help to reduce risk but increase return. Reduce risk but increase return. So all these are important to help realize diversification benefits to improve risk-adjusted returns. And same observation is what we notice for a Singapore portfolio. 50% Sing equities, 50% Sing bonds. Make a 10% allocation towards gold, there's higher risk-adjusted returns. Higher risk, but higher returns, but at lower risk. So all these help reinforce its status as a long-term store of value and also as a safe haven asset, which can provide this kind of unique diversification benefits. Actually, I could have shown even beyond 10% allocation, like 20%, 30% allocation. But what we want to advocate is a diversified portfolio rather than a 100% all-in gold kind of portfolio, because we want to ensure investors they build proper portfolios that are duly diversified and that can weather and also withstand different market conditions. So I think in terms of gold, basically 3 key things to remember, 3 key long-term drivers. They can be summarized into C, D, and L. C for central bank demand, D for de-dollarization, and L for long-term store of value. So for central bank demand, you will notice from the 2 charts here that they have been increasingly central banks have been increasingly ramping up gold within their reserves. So the key countries, especially between 2020 to 2025, those are the key countries with the highest percentage increase within gold, within the reserves will be what you notice here, Turkey and Poland, especially Poland, which more than doubled the percentage of the gold within reserves. So all these are contributing to the significant rise in demand for gold, and they also act as pricing support for future gold prices. And especially when there are attractive entry points now, when there's so much volatility caused by the Iran war, whenever there's an attractive entry point, whenever there are dips within gold prices, we notice a lot of institutional demand scooping up and also net buying gold. So I think it is a key trend we have noticed. And all these are based on data from the World Gold Council. And all these are happening, especially for institutions and also central banks, because of the broad trend of de-dollarization, where these institutions are diversifying away from the US dollar. And in this global trend, what we notice is that for the past 25 years, gold actually has been a lower percentage of global reserves compared to the US dollar until August 2025, when this trend actually reversed. And so for the first time in August 2025, gold actually outweighed the US dollar as a percentage of global reserves. So it's a significant trend. First time it happened since year 2000. And since then, this yellow line has been going up and up. So it's important because it's a global trend that is unfolding and especially made more intensified when there is an ongoing war. And all these actually help to contribute and reinforce the status of gold as a long-term store of value. So gold has existed for more than 5,000 years. There's finite supply. There is only so much of gold available on Earth. It's not renewable also. And because of this, because of this, it's very different from paper currencies, which can be readily printed. In the past, they used to be backed by gold before 1971 due to the Bretton Woods system. But since 1971, when the US dollar is no longer backed by gold, and same for many other paper currencies, they can be readily printed. And when there's money printing, all these costs and lead to inflation. So gold has its value here to be able to preserve purchasing power. And this money printing, from what we notice, is not just for the US dollar. Same thing for the euro, Aussie, yen, renminbi, any other paper currencies, including our very own Sing dollar. And this is where actually gold is important to be able to help preserve wealth and preserve purchasing power, like what it has done for more than 5,000 years. And so in short, these are the three key things to remember about gold, about why invest in gold. Higher risk adjusted returns because it provides diversification benefits. Second, gold is a crisis hedge. It provides a safe haven avenue for capital to flow towards. And third is about long-term value preservation and inflation hedge against paper currencies, which can be readily printed. And there are a lot of actually different ways to invest in gold. One way is actually through owning physical gold directly. And if you own physical gold directly, it means actually you also have to worry about storage, vaulting, insurance. And also at the same time, if you go and buy the real physical gold, like what, let me see, like what I have here, yeah, a PEM gold bar, you have to queue and also pay high beta spreads, which can be as high as 20%, as high as 20% in terms of beta spreads. So this means that, for example, if the gold is only worth $1, you pay $1.20 for it. So in short, that means you actually lose 20% in terms of returns upfront, and you have to make back the 20% to be able to cover back what you actually paid. So I think physical gold, this is a key constraint. Although it's tangible, it provides the material comfort, the mental comfort. This is what investors have to trade off for, high beta spreads. But there are also other forms of investments to look at. So for example, gold ETFs, there are actually two types of gold ETFs. One is the synthetic gold ETFs. These are the kind where actually management fees can be very low, probably even few basis points or above 10, just 10 basis points. But there's huge risk involved because there's the futures contracts rollover is all backed by derivatives. And at the same time, there's counterparty risk. So if the issuer of the gold derivative of issuer actually collapses, the investment could be lost. So these are things to take note, or if not, gold futures. But if it's gold futures, it involves leverage and also same thing, there's counterparty risk. So actually the more ideal case for a gold ETF is actually one that is vaulted in Singapore. So there's no geopolitical risk, or much less geopolitical risk, because there's less risk of confiscation gold compared to other jurisdictions. One that is backed by physical gold, so the gold is there and means the ETF units are also backed by the real physical gold, and also one which has high liquidity and fully insured. And this is where our LionGlobal Singapore Physical Gold ETF comes in. Basically, three key things to remember about our gold ETF. All our gold is vaulted in Singapore, geopolitically neutral, zero risk, zero history of confiscation of gold. And while many other gold jurisdictions actually confiscated gold before, especially US or UK. Second is in terms of full insurance. We fully insure it against loss, damage, and theft while in custody and transit. So when I talk about in transit, some of you might ask, actually, what does in transit mean? So in short, right, once the gold reaches Changi Airport, it needs to be transported to our vault at Le Freeport, which is few minutes drive from Changi Airport. In between this journey, if there's any loss, damage, and theft, even during the transport by an armored vehicle, insurance will cover it. So this is what we mean by fully insured. So the insurance coverage is extensive. Not many gold funds or even gold ETFs actually allow or cover this because there's a lot of cost involved. But we still do this full insurance to be able to provide assurance for investors. And third thing is our gold ETF is expected to have the same liquidity or similar liquidity compared to many other gold ETFs or gold funds because the underlying gold is tradable globally. Our maximum bid ask spread, which we already worked with market makers, will be capped at 0.3%, maximum 0.3% for bid ask spread. So we expect this to be a very liquid ETF. But at the same time, despite having benefits like full vaulting in Singapore and full insurance, we are only offering it at a competitive expense ratio of 39 basis points, which is slightly lower compared to Spider Gold, which also vaults their gold, but which vaults their gold in Singapore, not in Singapore, in the US and UK. So this is basically the key comparison. So for example, in terms of domicile, we are domiciled in Singapore. So when we talk about domicile in Singapore, means we pass the higher and stricter standards of a MAS authorized collective investment scheme. So this one of this requires us to actually disclose something called unallocated gold, which I will touch on later. But compared to, let's say, other forms of investments, for example, like Spider Gold, they're domiciled within the US. So let's say if the unit holder passes away, the beneficiary might need to pay US estate duties. But for a Singapore version of an ETF, Singapore domiciled fund, this will be avoided. Second, we fully vault all our gold within Singapore. For Spider Gold or even Value Gold, they vault their gold within US, UK. So these have seen historical confiscations before, especially for Spider Gold for US and UK. We fully insure our gold against loss, damage, and theft while in custody and transit. Many other gold funds or even other gold instruments, gold investments, they do not fully insure their gold. And what we hold is actually the investment grade physical gold bars, 400 ounce gold bars. Each of them have their unique serial number and all these. All of these basically are uniquely identifiable. They meet the international standards, minimum purity of 99.5%. They have all the refinery name and all those weight, all those different things, all captured within the gold bar. So it's standardized and also highly tradable by institutions and central banks around the world. And there are numerous jurisdictions to be able to vault gold, store gold, but we choose to vault them in Singapore. First, Singapore is our home ground. Second, there's actually low risk of natural disasters. Singapore is also politically stable and also geopolitically neutral, which makes it an ideal location to be able to vault gold. And one thing to note is actually that there's a lot of space in storage space and infrastructure, advanced infrastructure to actually vault the gold in Singapore. But just there's the space. We just need to be able to have more and more gold here to be able to vault all this, to be able to vault the gold. And Singapore is AAA rated, highly safe and secure, which makes it ideal to be able to store and vault gold. So we vault all the gold within Le Freeport, Singapore, 24/7 security, direct access to Changi Airport. And there's a lot of basically constant CCTV and also electronic surveillance to ensure that the gold I think in fact the gold is more protected than humans. So it's one thing to note because it's also held underground. So there's a lot of security features and also facilities there to ensure that the gold is which is highly valuable is properly stored. So I've come to this portion about unallocated gold versus allocated gold. So allocated gold basically means the uniquely identifiable physical gold bars. These are the gold bars with all the serial numbers, refiner names, all these that are already properly captured. There's the other part which is not so much disclosed, even in many other gold funds. And many gold funds need to hold unallocated gold. So one key example, for example, right? If you only have 399 ounce worth of gold, you cannot use it to go and buy a 400 ounce gold bar. But if this kind of case occurs, where do you hold it? And the answer is actually to hold it as an unallocated gold. Once it once it's 399 ounce, when there are more and more subscriptions coming, it turns into 400 ounce, then we will use it to go and buy the 400 ounce bars. So this is where actually unallocated gold need to exist. You think of them as spare change or accounting entry gold. So once it hits 400 ounce, then we're going to use it to buy the 400 ounce bars. And all these are to ensure that we can meet the, if there's any liquidity needs and also redemption needs, all these can be met by cash or even by unallocated gold. And for allocated gold or unallocated gold, we similarly insure them. So this is the key thing to take note. We insure both allocated and unallocated gold. And unallocated gold is supposed to be a low percentage of the entire fund. Right now, it's probably below 1.5%. As of 31 Jan, it was around 1.8%. And we intend to lower the percentage of unallocated gold as the fund grows bigger and bigger, because there will be more and more exposure. Once the fund size grow bigger, that means there will be more money to go and buy all the physical gold bars and less need to hold unallocated gold. So these are the key things to take note, and we disclose this within the prospectus. Some other gold funds, despite having unallocated gold, they actually do not disclose within the prospectus. And this is what having a MAS authorized scheme matters, because we are abide by stricter and higher disclosure standards. So, and in terms of this full insurance on the allocated, which is the physical gold, we provide full insurance against loss, damage, and theft while in custody and transit. Many other gold funds, including the other ones that are labeled here, or many even, there are even at least 10 other gold funds we can see, they do not fully insure their gold. So we vault them in Singapore, which is safe and secure, and after that, to add another layer of assurance, we fully insure the gold. So this makes our offering unique compared to many other gold funds or even gold ETFs out there. And the next thing I want to touch about is actually in terms of the efficiency compared to buying physical gold. So I think in terms of if you buy a small gold bar, let's say, because a big gold bar, let's say like a kilo bar, the entry point can be high. It's like Sing 200K at least. So not many people want to hold that much within the physical instrument. And once you buy a high value physical instrument, you have to think about vaulting, think about insurance. So these two are key recurring costs to think about. And if the investor doesn't want to buy such a big gold bar, you go for something that is more friendly. It means, let's say for example, if you go for a 1 gram gold bar, the bid-ask spread can be as high as 22%. So it means you buy something, the true value is $1, you pay $1.22. So it means you lose 22% upfront. And for example, for my very own gold bar here, I paid 14% in terms of spread. So all these actually are significant and huge upfront costs to remember. And this is where actually an ETF comes in. It becomes a lot more efficient to buy and hold an ETF. Total expense ratio is already fully capped at 0.39%, meaning that if you invest 1K, it's 390 for the whole year. And the 390 is not all deducted upfront. It's accrued daily. So it means it's around 1 cent daily. So 1 cent daily for a 1K investment. So all these actually provides greater efficiency compared to buying and owning physical gold. So in short, 3 key benefits of a gold ETF. First is in terms of accessibility. After it's listed on 26 March, there can be trading for as low as USD $5 per unit. So right now, the entry point is actually a lot lower compared to many other gold funds. If we look at GLD, they are trading at USD, I think 460 plus or 470 per unit. Ours is 90 times lower. So it's significantly lower in terms of entry point. Second, in terms of convenience, you get to avoid all the logistics. To be able to buy the gold bars, you don't even need to go and queue or go and visit the gold, and after that think about where to store, where to insure. So I think all these we make it convenient. For the ETF, you just buy on the Podium's app. And third part is about efficiency. Not only about vaulting and insurance, where you do not have to worry. There's also the part where it is so much more easier to be able to buy and sell. So I think after you buy, but if you want to exit one day for physical gold, you have to carry it directly to a physical gold dealer and all those. But for an ETF, if you want to sell, exit the position, you just click sell on the broker app. So gold ETF makes it a lot simpler compared to many other gold investments. So our ETF is actually the ETF share class of our recently incepted LionGlobal Singapore Physical Gold Fund. We incepted this back in 1st of December last year. And since then, we have closely tracked the benchmark. The return so far as of 27 Feb, the chart here shows 31 Jan, but we have further returns between 27 Feb, around the same, around 19% in terms of return. But the holdings, in terms of holdings, our exposure to allocated gold is higher, already higher compared to the 31 Jan version, because allocated probably we are near 99% already, and we expect to, as the fund size grow even larger and larger, the percentage of allocated gold is expected to increase because the portion of 400 ounce, 399 ounce scenario will be lower and lower as the fund size grows bigger. So as of 27 Feb or even the latest AUM as of yesterday, we are already above 430 million Sing dollars in terms of fund size. And with the good demand we have been seeing for gold, we expect this to go higher and higher. And if we compare this with other gold ETFs or gold funds that are incepted elsewhere, for example, like the UBS one, the Pictet one, which are more the European version, iShares Gold Mini or Spider Gold, performance is comparable. So you're not really losing out in terms of tracking error, in terms of tracking of gold price. It is comparable. And what we want to share is that we also have a mechanism called the intraday indicative NAV. So it sounds complicated. In short, the market trading price of our ETF will closely track XAU, which is the real-time gold spot prices. So the market makers are using that as a reference to be able to price and also hedge the ETF. So all these are expected to provide greater liquidity. And we will be issuing the ETF units at USD $5 per unit. Initial offer period is now until the 20th of March. We will list on the SGX on the 26th of March. So there will be two tickers to remember. GLU for the USD ticker and also GLS for the Sing dollar ticker. So U for US, S for Sing dollar. So remember these tickers. In terms of total expense ratio and also management fee, we are at 39 basis points, slightly cheaper compared to many other gold funds out there. And our issue price is at $5 per unit, which is significantly lower compared to many other gold funds or gold ETFs that trade at around or above 400 USD per unit. So it's a lower entry point, and also at the same time helps you build gold exposure. And this is where I want to share a bit more about the promotion we will have with Phillip Securities and Podiums. So basically for the first 400 clients, which I know is still available, for every USD 5K invested, you will get 12 Sing dollars of cash credit. And this is capped at $600 Sing per client. So basically, if you invested 250K USD, you will get the full $600 Sing dollar credit upfront. And within the Podium platform, there's also an additional promotion, which is add-on on top of this. So for clients that actually buy more than USD 250K, for the first 20 clients, you will get a 1 gram gold bar. So it's to show and symbolize the tangibility gold exposure within your portfolio to achieve greater diversification. So I will hand over the time back to Huanzi, who will share more. And if there's any Q&A, just feel free to ask me the questions.
Yep, thank you, Xun Xiang, for the sharing. Let me share the screen back again for the slides before we go to Q&A. So very short one, very fast. Okay, so I think you can see my slide now. Okay, so like I mentioned, so you can scan this QR code to generate your unique referral link to share with your friends and family members. So if you wish to join, you can just screenshot this page right now. All right, so you can get up to $60 per referral if they fulfill the requirement itself of the referral program. Okay, so like what Xun Xiang mentioned, is up to $600 of cash credit per client. All right, and then you get it by having $12 Sing per 5,000 US dollar applied for this gold ETF. And the first 20 to subscribe for a minimum of 250,000 will also receive the additional 1 gram gold bar as well. So both are still eligible right now. So just if you have any questions, feel free to contact us to inquire more, or you can just apply as I show you the steps later. So also, if you use financing for your trading itself, you need to use some leverage in your portfolio. So you consider Sing dollars now at 3.2% and US dollars now at 5.88% for margin account. through the Poems account. So if you're interested in using margin facility, you can contact your trading rep for more details. And this is the QR code to join our Telegram for the market updates. So screenshot this page to just join our that, or you can use the link to join our Telegram group as well. Okay. Okay, so you apply, there will be some steps involved, so like I mentioned. So the key thing to note is that it's already available now, right? The ending date of the subscription period is 19th of March 2026. All right, the listing date of the ETF itself is 26th of March 2026. So the subscription price will be $5 USD per unit. So it means that if you apply for the minimum quantity, which is 100 units, you will be applying for a value of 500 USD. But do note that even though it's a minimum 100 units, when it is listed, you'll be trading in lot size of one share. So you can trade in 1 unit per trade for the listing after it's listed. All right. Just that for IOP period, it's minimum 100 multiplier. So 100, 200, 300, or 1000 plus and onwards. Okay. And there's no commission involved for the IOP period, as well as there's no other additional fees for transfer to CDP as well. So when it's listed, the trading currency will be in both SGD and USD, which I think Xun Xiang mentioned. But for the IOP itself, we are doing only the USD model. How do you subscribe? Go to the login on the website. Currently, it's only available on the Poems web, which is a 2.0 website. All right. Go to account management under stocks, under online form. There will be this option called IPO subscription, online irrevocable form. If you click on it, they will ask you if you wish to update your particulars. You can press skip if you have no changes to your particulars. You can confirm after you press skip already, and you'll bring you to this page. All right. So you just click on the name of the LionGlobal Singapore Physical Gold ETF. Click on it, they will highlight it, and then press apply. So once you apply, you reach this page as well, where you can indicate your quantity. So do note this is the quantity of shares or of the ETF units to apply for. So the amount that you'll be paying will be actually $5 times this quantity, which will show on the next page after you confirm. So, but before that, you must do the disclaimer declaration, all right, the two declaration and the password to confirm. Once submitted, they will show you the gross payable. The payable will be the amount to pay in US dollar, USD, yeah, not Sing dollar, it's USD. Right, you can see that there's a total amount payable here highlighted, and as well as the currency is US dollar. So do note the highlighted part here also is underlined that you have to ensure that your account, your trading account, is funded by 19th of March by 5 p.m. to be eligible for the IOP, and to be also eligible for the eligible for the incentive itself. You need to hold the ETF until end of April for the $12 per 5,000, right? And then you must fulfill also additional requirement if you are getting the 1 gram gold bar for the 250,000 application, right? So here you can see other application status. You can see your existing applied value, 5,000 units, for example, for 25,000 US dollar. You can choose to amend or withdraw if you wish to, but you can amend and withdraw only before the ending date of 19th of the March, right? Okay, so reiterate these two promotion. Okay, so let's move to the Q&A. So before that, I'll let Xun Xiang share the slides again in case we address any questions.
Okay, sure. I think that there's been a common question. I will just address it upfront. How
Yes, correct.
many, what is the, okay, before I start, can you see my screen?
Yes, we can see the screen.
Okay, there's been a common question in, I think this is like the 11 or 12 webinar or seminar I'm doing already. So I think there's been a common question. Well, how much gold you own and all those. So I think the thing is during the initial offer period, we will issue the units at 5 USD per unit. So for example, and we will, after we collate and pull all the subscription proceeds on 20th of March, we expect to use it to go and buy the gold. So if there are cases, for example, like for example, just assuming for simplicity and also easier discussion purposes, let's say we buy the gold, we manage to buy the gold at average price of USD 5K per ounce. It means that 1K ETF units is approximately backed by 1 ounce of gold. And in this kind of scenario, let's say if between March to 26 March, 20 March probably evening, and 26 March morning, if gold price actually goes up by 4% to 5.2K per ounce, it means your ETF will be roughly around $5.20 per unit. So it means it will be a profit case. And similarly, if there's another scenario, let's say if gold price falls between 20 March to and 26 March, gold price let's say falls to 4.9K per ounce. So it means there will be roughly like a 2% loss, around USD $4.90 per unit. So these are the key things to take note. We already came up with this infographic. If you need the picture, feel free to take it for what you see. So but rest assured, your investment is backed by physical gold. And this is a key thing where a lot of other gold funds, gold ETFs do not have. Some are synthetic. That's why the management fees can be even lower. But this is a physical gold ETF. The ETF units are backed by physical gold, and we insure them fully and also vault them in Singapore. So I think maybe this will address some of the key questions. All
Yep.
right, I think there's another question about comparing unlisted and listed. Just share screen again. This one I go to this slide. Yeah. Okay, so for our unlisted versus listed, our listed class is a USD listed class. So this means that it's USD unhedged in terms of exposure because we buy the gold fully in USD. But for our unlisted class, we have a unique share class called Sing Dollar Hedge Share Class. So for Sing Dollar Hedge Share Class, there's the FX risk between US dollar and Sing dollar movement is cushioned because we do hedging against the Sing dollar and USD movement. So because of this, for the unlisted class, there's this unique one that is not yet offered as an ETF. And for the ETF is USD unhedged. But with that said, ETF of the vehicle offers other benefits. For example, like intraday trading, there's liquidity. And the liquidity is based on real-time spot gold prices, XAU. So because of this, we track the real-time gold spot prices once it starts listing we have a because market makers need to refer to something called the intraday indicative NAV to be able to refer and then after that price the ETF units accordingly. And the management fees and also total expense ratio is kept at 0.39%. Basically, it means if you invest 1K, it's 1 cent per day. So these are key things to take note. Okay, there's a question whether you can use SRS to invest. SRS can be used to buy the Sing dollar ticker, which is GLS, after listing. And in terms of whether gold is overvalued, undervalued, and all those, okay, in terms of what we see now, right, the war is causing a lot of geopolitical uncertainty and also volatility within gold prices. And right now, actually, there are a lot of dips. Sometimes there's gold price rise, then after that, sometimes there's dips. And what we believe that is that actually all these dips, they are attractive entry points for investors to start accumulating. Because when gold price were to go high, then people will worry. Actually, will gold price go higher and higher? Or whether it will reverse or mean revert one day. But when dips occur, then some investors might be thinking actually whether this dip will further go downward and all those. So I think what we suggest for gold is take a dollar cost averaging approach to consider, because even a lot of institutional investors, for example, like people like Ray Dalio already recommend that it's important for investors to at least have some allocation towards gold because there's diversification benefits. Because gold throughout time is a long-term store of value. And in terms of long-term drivers, central banks are net buyers of gold. With all these dips happening, what we see and also notice that institutions are accumulating and building up further and further in terms of gold exposure. And other than that, there's also the broader trend of de-dollarization. Institutions are diversifying away from the US dollar. And with all this happening and also geopolitical uncertainty unfolding, we believe that gold in the long run or even in the medium term is still favorably positioned, and it has given diversification benefits. So all these are important to it's important to have a small allocation towards gold within your portfolio. Okay.
Let me take the question first. So, the trading fee itself, right, for SGX side is the same, right? It's percentage basis. For the trading cost itself, I am not sure for the, cannot say for the other platforms, for POEMs. For ETF, there is no minimum commission, even though normally the stocks there is a minimum commission. So let's say for cash management account, the minimum commission of $25. For ETF trading, you just go into the percentage basis. There's no minimum commission for ETF in Singapore for trading of ETF, right? So you'll be only based on the percentage basis. So if you compare between the account types, it's just the percentage basis comparison between them. All right. So this is not really a special discount, but it's across board all ETF. There's this feature where there's no minimum commission. And how do you subscribe? Is actually subscribing through the Pioneer's web just now I showed on the website under the account management, under online forms, then under the IPO subscription form itself. All right. Okay, next question for Xu Xiang is can the buyer of the ETF take physical delivery? I think there's a few questions regarding this, whether can be delivered or can collect the physical gold itself.
Okay, I think in terms of physical delivery or this, there's a minimum 25 kg for ad hoc. Okay, what we term it within the prospectus is called in-kind redemption. So there must be at least 25 kg worth of the gold holdings then that the investor has, then this can be requested. So we already have all the workflows in place. But the vault can only deliver this to the participating dealer. And the participating dealer, because of this, also needs time to go and do all the workflows to be able to facilitate this. So I think all this will take time, although on the manager side, we already have the workflow. So this is one key thing to take note. And the thing is, let's say, right, even if you do the physical redemption of the gold, key thing to note is that once the gold actually reaches the participating dealer's hands, the insurance coverage will stop. So it's actually safer to keep the gold within the vault rather than in your own hands. To have it or even pass it to once it reaches the participating dealer, insurance coverage will stop. And there's also this additional hassle to arrange all the appointments with the participating dealer for the investor to go and collect the gold. So it might not be so efficient. So, and what the ETF offers is actually exposure to gold, and the units are backed by physical. I think probably this will be one angle to consider rather than having the redeeming it for the pure physical gold. So maybe these are things to take note. Okay. Okay, there's a question about yeah. Okay, this ETF is classified as excluded investment product, so you do not have to take a customer knowledge assessment to buy or trade the ETF.
Okay, there's also no subscription fee involved. So whatever you applied will be the amount that you pay for this IOP, right? So SGD will be traded, right? Trading after the listing date, which is on the 26th of March, right? So you can trade on both USD or SGD classes after the 26th of March. I think there's a question, quite a few questions on OA. Let me repeat again. So CPF will not be eligible to trade at this point of time for the ETF, right? But SRS can trade, but only after the listing date. Okay, how do we cross-check the price with the actual physical price? Anything, Xu Xiang?
Oh, the which one? Sorry.
The
Okay,
first one.
cross check. Okay, how do we cross check? Okay, the okay the on the LGI's website, we will publish the intraday indicative NAV. So that price is actually the gold spot price, and is refreshed every 15 seconds. So our market makers also need to refer to it when pricing the ETF units we have. And the bid-ask spread is supposed to be at 0.3%. So because of this, it's expected to be extremely close to the real-time spot gold price to ensure that the trading volume, all these, they are there. And with that said, our issue price is also at $5 per unit. So because of this, the trading volume, because it means a lower entry point, so the trading volume, all these actually could be expected to be even better compared to many other gold funds or gold ETFs. So this is the key thing to take note. On our website, we already put the real-time spot gold prices. We publish them Monday to Friday, 24/7, refreshed every 15 seconds. So these are things to take note. I think the question about 1 unit, how many ounce? Actually, I see whether it's possible to just copy paste the infographic over. So I think this question
Okay,
can be
so let me continue.
permanently
Like
addressed.
USD in account, yes, you will be deducting the US dollar from your trading account. But if you do not have US dollars, not to worry. If you have Sing dollars in the account, you will convert the Sing dollars to the US dollar. Just that you need to ensure there's sufficient Sing dollars inside the account to deduct for the subscription itself. If you're not, because if you don't convert beforehand, the exact Sing dollars required might be fluctuating based on the currency exchange rate. So you can choose to convert first or just leave Sing dollars in the account. You can check with your trading rep for your trading team to assist you if you need any help on this. Okay, so
Okay,
there's
this question.
yeah,
Yeah, sorry, Hansa, you continue.
yeah, correct. So I think there is in terms of privilege wise, it is that you can apply beforehand. And right now, if you apply for IOP, there is no transaction fees, no commission, as well as no additional fees involved in the application. All right. And also, even though it's only for US dollar, when it is listed, you can cross trade between the US and Sing dollar listing. It is the same listing. Maybe you can add on, Xu.
Sorry, what was the question?
Yeah, in terms of subscribing now compared to later, was the Sing
Okay,
dollars is only later. Yeah.
okay, in terms of subscribing now versus later, the thing is if you subscribe now, you first gain exposure to to go within your portfolio already. And right now you notice that the price swings are very wild because of the US Iran war. One says they want to end the war, the other one don't want. Then there's all those different uncertainty and volatility coming in. So every single asset class is having wild pricings. And in fact, for what we notice, even though equity, probably the price swings are even wilder compared to gold. So, and this in this kind of case, it's actually more prudent to be able to hold gold because in the long term, it has shown its value to be able to preserve value and also withstand different market price swings and also price shocks. And so because of this, it's actually more prudent to buy now during the initial offer period. You still get to enjoy client promotions, which we probably won't have after we list the ETF. So it's the first-hand opportunity to be able to build the gold exposure within your portfolio. And after listing, after all still have the choice to be able to sell the ETF units after listing. So it's more important probably to build the gold exposure within your portfolio first. And second, I think the one Hanzi also previously mentioned before is that during the initial offer period, you can subscribe only in US dollar. Means what you get will be GLU units. But after listing, you can choose to sell in either GLU or GLS. They are both fungible. But personally, if I get GLU units, I will probably sell in GLU instead of GLS. Because once I sell in GLU, I get USD proceeds. I can choose the time I want to convert into Sing dollar. But if I sell GLS, means the conversion happens right at the point of time when I sell. So maybe these are the things to also take note.
Yep. Okay,
Okay.
so Cash Plus account definitely can apply as well along with the cash management accounts they can apply. So the only account that is not eligible to apply is the cash trading account, the one that is gyro link or there's no ledger. Do note that you might not be able to apply. You can see when you log in on the website to see whether you are which account type when you're trying to apply for the IOP. Any fees? There's no fees I mentioned. Okay, the $12 per $5,000. All right. The cash credit incentive will be credited to you within 30 days after the promotion period, which is you must hold 30 days. So it means that you must hold from the ETF launch date, listing date, 26th of March, all the way to the 30th of April. So if you hold to that date, then we will be able to give out the incentive to you within 30 days of 30 April. So by latest is end of May, you will receive it. All right. SGD share class, how do we calculate? Maybe she's going to touch on this. And also there's a question correlated is GLS an unhedged share class specifically for the SGD?
Okay, I think the ETF is a USD listed unhedged share class. So this is the key thing to note. But we allow it to be tradable in both Sing dollar and US dollar because we understand certain investors they might prefer trading in Sing dollar. So that's why we open up. And Sing dollar is also available for SRS subscription. So this is why we open up in terms of Sing dollar ticker and also have a USD ticker, both tickers being tradable together. So these are the things to take note. I think there are also other questions. Does the ETF pay dividend? It does not pay dividend because gold does not pay income or dividend. And I think probably if there is a gold fund that tells you it pays dividend, be careful. It means there are actually gold derivatives underlying. So there's actually a lot more risk involved. So these are the key things. Okay, let me
Okay.
see.
Another one is if you invest 5,000 for IOP, you only have to pay the 5,000 US dollar. There is no transaction fees involved for the IOP period. Yeah, so that's a question involved. How many bits per trading is following the same as per Singapore listed counters, the trading. So the counter should be trading to the point of 0.001 or 0.01. Yeah, 0.01, correct. For $5 US dollar. Okay. If you invest 50K in the ETF, how much gold do I own physically? Is it valued at the point of investment or at the point of withdrawal?
Okay, I think in terms of this is valued at the point of withdrawal. So I think okay, all these probably you have to go back to understand. Okay, I go back to the infographic again. Oh, yeah. Okay. To the infographic again. If some of you didn't manage to catch this, probably good to take note. We will not know what kind of price we will buy the gold at until 20 March itself. So, but the units, regardless of what, will be issued at $5 per unit. So, assuming if we buy at 5K per ounce USD, it means that, and if you hold 1,000 units, it means that your ETF units are backed by around 1 ounce of gold. So this is the thing to take note. And let's say if gold price increases during between 20 March evening until 26 March morning, you will get an investment profit. Let's say if it's increasing to 5.2 per ounce. 5.2K per ounce means you get roughly 4% in terms of K. So in contrast, if let's say it falls to 4.9K per ounce for gold price, then means you roughly get a 2% loss. So the price difference between 20 March and 26 March morning is something you need to take note of if 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 it's investing during the IOP.
Okay. So also another point,
I think I
the
think there's this question: if the is the free 1 gram bar and $600 still available? Maybe more for Hanzi.
yes, it's still available. Right? So do actually submit now at this point of time that I know is still available. Of course, it might be of limited. So if you wish to apply, you can always apply first, and then you can check with us whether you are eligible for it. Next thing is after listing, can I buy the SGD Gold share class using SRS with no minimum commission for the SGD listed ETF? Yes. So once it is listed, you will have for ETF itself, for Singapore listed ETF, there is no minimum commission. So yes, this SGD Gold class will be eligible for that. Even the USD one will not have a minimum commission because it's a Singapore listed ETF. So as long as you're a Singapore listed ETF, there's no minimum commission regardless you're trading in the US dollar form or the Sing dollar form for the listing of this LionGlobal Gold ETF. All right. And after 26th of March, the management fee. Okay. So I think what Xu Xiang shared just now of the 0.39 is the total expense ratio cap at 0.39. I don't think it's just purely the management fee. Am I right?
It's total expense ratio. So total expense ratio includes management fees, includes insurance, includes storage, includes many different fees. They are all lumped together, capped at 0.39%. So not many funds they actually do that to give you the total expense ratio cap. But to make it competitive for investors, we cap it at 39 basis points. And also at the same time, we vault all the gold in Singapore, and there's full insurance on the go. So I think it's a unique feature compared to many other gold funds out there. So probably these are things to consider, especially if you compare to the US listed ones or the UK listed ones. They found all their gold in US, UK. There have been history of confiscation. Some even use gold derivatives. So because of this, that's why the management fees they appear artificially lower. But the back, there's actually a lot of risk involved.
Okay, so next part, okay. Custody is within CDP and no minimum commission. Yes, this is for if you're trading on a cash management account. All right, then yes, you can apply through cash management account, and then it will be part to CDP. There's no minimum commission to trade. Whether is it for all brokerage or only for Philip? Philip does it for other brokerages, you have to check with them, but I cannot speak for the other brokerage houses. For what is the NAV of the IPO, I believe it's US dollar 5 that is launched at the IOP date. But thereafter, I think the movement will just follow the market price. But maybe she's want to answer the next part, which is the 90% of the fund invested and the remaining 10% balance fund.
Actually, we mentioned within the prospectus that 90% invested in physical gold, but as much as possible, we want to invest up to 100% within the gold. Because there can be cases where we, for example, hold unallocated gold, basically the accounting entry gold. When let's say we do not have, we only have 399 ounce, we cannot go and buy a 400 ounce bar. But as much as possible, we will go towards 100% into physical gold so we can maximize exposure to this asset class.
Okay, so next one is estimated return in percentage. This one is really dependent on how gold price movement. So you are actually getting an exposure into gold price if you invest in this. So I don't think that we have an answer for what's the expected return in percentage. How much gram of gold? I think we answered that a few times. Okay, so then the main question is how do we measure this new ETF versus, let's say, the SPDR gold responsiveness to the price movement of gold?
Okay, in terms of price responsiveness, what you can do is you can actually compare the intraday indicative NAV in terms of both GLD versus ours, and I think you also can compare the bid-ask spread between the buy price and sell price for GLD versus ours. So I think that we actually, in fact, our ETF, we have 3 designated market makers. GLD only has 2 market makers. So we actually have more market makers than them. Our entry point is significantly lower at 5 per unit. Theirs is at USD 470 per unit. So just based on principle. So means that because ours is at USD 5 per unit, we can actually capture a lot more investors. Because there can be cases where, for example, some investors, they prefer investing gradually rather than all in one go. So we can capture the investors that actually invest the smaller tickets, because 5 per unit, we trade at 1 unit. It's possible to trade in 1 unit each. So because of this, the ticket size can be a lot smaller, and the volume can be actually a lot better compared to even GLD or many other ETFs. And we are also within a special category of ETFs called SGX category A. And within this special category, only GLD and the 2 SDI ETFs are inside. We also applied to be inside. So this means we commit to a maximum bid-ask spread of 0.3% with our market makers. So because of this, the liquidity, the trading volume, all these is expected to be highly similar compared to GLD. But at the same time, you get added benefits of all the gold vaulted in Singapore, and also full insurance of the physical gold against loss, damage, and theft while in custody and transit.
Right. Okay, next one. Okay. Xu maybe you can share again the slide on the comparing between the ETF versus the spot gold. I think the question on the remarks part. Yeah.
Okay. Can this be seen?
Yeah. No, not that. The spot gold versus the spot gold one. The one that you compare the spread between the.
Oh, okay.
Yeah.
The one in physical gold, this one.
Yeah, physical gold. Yes, correct.
Yeah.
Okay, so I hope this answered the question. So basically, there is some cost difference in terms of holding, insurance of holding, and also the voting and the inventory cost. Okay, so we didn't mention there is no risk. So gold ETF definitely still have risk involved, just that it might work well as a diversifier for a full portfolio of investment to actually lower your volatility, all right, as per how it has shown in the past, but it might not always be the same for near term or in short duration of time measurement. So it's more for a portfolio diversification manner. All right. Okay. Okay. There's this one is GLS converted later. If there's SGD counter, what is the price? I think this question all relating is how does the Singapore dollar listing version, how do they calculate the price for that on a normal day-to-day basis after listing?
Sorry, which question is it?
I think it's more of like, there's a question what's the conversion rate charges between the SGD and
Okay.
USD for the listing price itself? Yeah.
Okay, in terms of the so is this question. Okay, so in terms of conversion between Sing dollar and US dollar, it is mainly more at the prevailing FX rate at that point of time. So for example, if you go in between GLS and GLU once it's listed, for example, 26 March 9 a.m. On 26 March 10 a.m., for example, if you want to sell, it will be based on the real time prevailing FX rate at that point of time at 26 March 10 a.m. And all these actually in terms of the price. So for example, let's say if exchange rate by then is between is okay, assuming let's say GLU trades USD 5, then at 10 a.m. 26 March. Then if exchange rate is 1.3, means Sing dollar will trade at Sing dollar 6.5. And it's based on the prevailing FX rate at that point of time. So let's say if 10:05 a.m. exchange rate changed to 1.31, so means the assuming the gold price remains same, so it means it will be 1.331 times 5, which will be 6.55 Sing dollars. So these are the things to take note. So because of this, it will always be based at the prevailing FX rate. And if let's say gold price also further change, let's say it's 5K per ounce change to 5.1K per ounce, then all this you have to times accordingly in terms of the together with the exchange rate to be able to see what's the eventual price being quoted and also being traded at.
Uh, will the gold price that you purchase be published on 20th of March?
Okay, I think in terms of the gold price, unfortunately, we will not publish the gold price on the web page because the thing is the even for example with all other gold funds like Spider Gold and all this, they do not publish all this within the web page and all this. So we are actually sticking to what competitors are doing. Because
Okay.
and in fact, like if the other competitors or comparable products, they actually do not publish. Probably it makes also commercial sense that we also similarly do not publish to protect the confidentiality of our purchase price and also the basis of the performance start date.
Understand. How about
Yep.
the unit trust versus the ETF? So I think these two questions is relating to the fact that um, when will you recommend to buy unit trust over ETF? And then the other one is how is it different for holding? Let's say I hold both the ETF and the unit trust in the USD
Mm.
form. Will there be a difference performance shown over the long run?
Okay, so for the unit trust, we have a unique share class called the Sing Dollar Hedge Share Class. So this share class cushions investors away from the USD SGD rate movements. So if you invest in that share class, you will not have any FX risk involved. It would just be purely the gold price up movements. Then for the ETF is USD listed unhedged share class. So because of this, it will purely track the real-time spot gold prices when it's trading. So and it will be purely in USD. And the Sing dollar ticker basically will be at the Sing dollar USD prevailing FX rate. So these are the key things to take note. So I think some investors they might even think, okay, let's say if I own a USD share class, unlisted share class versus a Sing dollar listed share class. Assuming you buy on the same day, the difference will only be due to the management fees and total expense ratio. And for the ETF, we kept a total expense ratio at 0.39%. So maybe it could be, if you compare like for like USD unlisted versus USD listed, it could be more efficient to buy the ETF because you still get liquidity and also it's traded intraday. So you can buy, let's say 9 a.m., you can sell at 5 p.m. if there's something you're looking at.
Okay, I think we are already at 1:10 p.m. So we take our last two questions. All right. So just to clarify, the after the ETF buy the physical gold, all right, it is not going to measure your holding in ounces. It's still going to be in ETF units. All right. So just don't confuse that part. Uh, then what is the FX rate we consider between SGD and USD for the IOP period? You can actually convert, all right? So we'll deduct US dollar from the trading account. So if you wish, either you can fund the account in US dollar if you have, or you can convert beforehand, even before 26, or even before the 19th of deduction date. You can convert beforehand the Sing dollar to US dollar, or you can leave it for us to convert on 19th itself for you based on 19 March conversion rate. So it really depends. We don't have a fixed number for you as you have a choice for that. Uh, Our rates for conversion is live for if you convert yourself on the live FX conversion page, or if not, it will be the FX rate that is declared on the website on the portal under our exchange rate in the announcement page. All right. Okay, maybe Xu Xiang would like to take the last question from the WL regarding the gold voting. Then that'll be the last question for today.
Okay, how the gold voting? Okay, so if there's massive buying of the gold, we will. If there's massive buying, okay, you're talking about massive buying. Okay, okay, because it can be quite vague. Okay, the question if okay, there's massive buying of the gold worldwide, right? So we already have sufficient gold within Singapore to be able to bought them. We have sufficient gold. We have spoken with the custodian to be able to reserve the X amount of gold within Singapore because we mentioned this we, due to the popular demand of gold. This will be at least $1 billion fund this year. So because of this, all these worries about gold shortage, all these will be taken care of. And if they're selling on gold, then all these they can be efficiently sold because our custodian is Standard Chartered Bank. So they are one of the largest bullion banks, gold bullion banks within the whole world. They trade gold very actively for institutions, for central banks. So I think in terms of liquidity of gold, whether buy, sell, not enough gold, all those stuff, all these worries are taken care of. That can be more than enough. In terms of the other part about market makers what they do is they price the ETF units. So it's completely different thing. On the physical side, there's the Standard Chartered Bank doing all the buy sell of the underlying gold, and all these there's more than enough gold. They hold hundreds of they hold multiple billions, at least at least 10 billions of more than enough gold within different locations. So all these parts about shortage of gold, all these things, that one probably don't need to worry so much. And now market makers, what they will do is in terms of pricing and hedging of the ETF units. So when talk about pricing of ETF units, is always against it will be against real-time spot gold prices, short form XAU. So if there's movements within real-time gold spot prices, they will also price and hedge accordingly. And they will, because of SGX regulations, specifically for category A, they must quote within bid ask spread within 0.3%, which is an extremely tight bid ask spread that Spider Gold currently also has. So we expect this to be extremely liquid and also at the same time closely follow real-time spot gold price because gold is liquid, is tradable globally.
All right. So thanks, Xu Xiang, and thanks everyone for the participation. I understand that we might not be able to cover every single question. All right. So I already also put in the chat box the ETF email. You can email us your questions if you have any beyond this today. Right, so I'd like to thank everyone for joining us this session. This is also on YouTube. So if you miss any part of it review, you can go to the YouTube link recording to actually review as well. Right, so once again, I thank Xu Xiang for joining us for today, and I hope everyone, if you're interested, do look at the ETF IOP subscription on the POEM's website access under the account management, under stocks, under online form, IPO subscription. Right. Thanks everyone, and hope you all can have a great gold investing journey ahead. Thanks, Yusian.
Thank you, Hanzi. Thank you, everyone, for your Friday lunchtime. Thank you.
Okay, I'll be ending in a few seconds time. Thank you.
Thank you.